We've seen some volatility in the tech sector in recent weeks, and it's particularly relevant given how much tech has driven equity markets over the last couple of years. It's really been driven by Facebook. And what we've seen is not that the results have been weak. Facebook continues to grow profitability relatively well, but that maybe it hasn't been quite as good as expectations. And the company has also moved to talk down some of the expectations that analysts have had. Nonetheless, the business remains highly profitable and fast growing, and this doesn't make it a bad stock in the future. Elsewhere in the tech space, results have been decent. Apple is an interesting case. In some ways, Apple went through a similar process several years ago when iPhone volumes began to slow. And in a quarter that was deemed to be a pretty good one, we saw unit volume growth of only 1% in its core iPhone business. So there have been some winners and losers in the tech sector in the current quarter. But overall, both in tech and in the broader market, earnings results so far have been pretty good, both at the earnings line and at the sales line. And that should help underpin valuations going forward. It's been a busy month for UK politics, and the Brexit negotiations seem to be coming to a head. The outcome is very uncertain, and that's had a negative impact on a range of UK assets, notably the currency, but also assets like property. When you think about the future, from a MoneyFarm portfolio perspective, we're quite relaxed. The portfolios are globally diversified, and we're not too concerned about events in a particular market like the UK. Nonetheless, we'll continue to monitor the situation, and if we need to, we'll make some changes. So far, we're inclined to wait until we get greater clarity on what the final outcome will be. The Bank of England hiked rates this week, in a move that was largely expected by financial markets. We don't think this is the start of an aggressive tightening cycle. The economic data and all the uncertainty around Brexit makes it difficult for the Bank of England to make an aggressive move on monetary policy. Nonetheless, it is a signal from the bank that they're keen to see monetary policy normalise and move away from the kind of post-crisis environment that we've seen over the last decade or so.